Welcome guys to trade recap slash training session, going over some of the plays that we had today. The reason why I'm making this video is because we had plenty of plays today that were reversals, and we've talked about this several times in other videos, but I wanted to stretch it even further and make sure that people understand how to trade them, and trade them wisely so that you're not getting caught in a trade where you're taking one short, then reversing it, and then getting caught in that trade and reversing again. It's not a game of multiple reversals. We're going to look at Etsy, and I'm going to show you one. It's not always a failed trade off of our levels, kind of like Disney that reverses, but sometimes it's one that gets near a level, and we've talked about this before, looking at these levels and how many times they've been touched, and why this is important. So let's get into this. This is going to be hopefully a briefer video, just highlighting a couple things that I saw today and things that I want you guys to be able to learn over time. It's adding confluences to your trading, which can only help your trading and your profitability over a long series of trades. So if we look here, I'll go on the daily chart for our inside day. We had our inside day here on Etsy. Etsy's been so strong lately, so we do like trading it. Man, it's up $17 today. Got up a little more than that intraday. So down on the 30-minute chart, it opens right here. We come down and we touch this level. That's been touched 1, 2, 3, 4, 5 times. 6, 7 times in the last month or so, in the last couple of weeks really. So we already know that's an important key level. Now, why would you get in here at this first red arrow? We opened right here below our 50% line on the 1 day levels. We went all the way down to the bottom of the day, all the way down to that spot that's been touched several times, half a dozen times, and we shot back up, creating our doji, and creating a candle that is very bullish. It didn't have some crazy spike where it went down and shot right back up, like kind of like Tesla does. It was down there. It got bought up. You could tell there it was moving like this, kind of moving up and down, and then it slowly went like this. You can even replay it, but I'm not going to do that right now. So I'm looking at that thinking, okay, we have good volume. So if we look back to yesterday, we have volume on the second bar of the day at this level right here. Okay, ignore the price to the right, 265. Ignore that's not the volume. I have my volume hidden up here for some reason. But anyways, I'm just looking at the level base of it. So we have more buying on that candle than we did selling on this big red candle. So I'm just thinking, okay, relatively speaking, it's very subjective, but relatively speaking, we have higher volume. And we have a huge push back up, which means buyers didn't want to see it go down below this line again. It's held that line several times. So I'm thinking, okay, if it can close above 50%, I'm in. So we got to close above 50%, I'm in, right? We get a dip down, nothing serious. And we shoot up, all the way up, all the way up. And I'm taking profits out when? At the top here, at resistance. I'm selling into resistance. So from, let's see, entry was 284, 284.24, selling at 290. That's like $6, and it's a 6-point move. I mean, your premiums are just flying at that point, especially when you don't get massive dips down. There's no real burn happening. You're just flying up. Your premiums are jumping big time. So that's one entry you could have done. Now this is obviously subjective in advanced trading, where you're looking left a lot and thinking, okay, what am I noticing here? And we'll look at other ones real quick just to kind of show you which ones can fail and which ones can't. We have increased volume. We got a nice candle formation. Let's go. I mean, enter small if you want to. It's an early entry, absolutely. Then we get our second entry right up here. If you didn't enter down here, and on this one we get our break. right? We get our break. We know there's momentum here. We get our break above our line. We get a close above 290. We're entering at 293, and we get in the first candle we get 3 points. So looking left, where's our first profit taking area? Right here, where it's bopped a few times, and it's right on the dot, right on the money. So guys, my goodness, just stick to the levels, stick to volume and price action, and you'll be fine. This is such a great 50% example because you can really enter into a trade when you're seeing confluences. And up here, I have this tool that tells me, okay, we're up on the week, we're up on the month, which tells me I've got multi-time frame confluences. The algo was good. I did go over to my dashboard. I typed in Etsy and looked around at the options and stuff just to make sure. When it was down here, when it was down here, I was like looking as it was coming back up. You're doing your due diligence as you go, but really, all you need is looking left and a prior setup with levels. So let's move into GM because this is an example of a trade that I took that I got 10% premiums on and it barely budged. So on GM, I like to, on stocks that don't move a lot, I like to go down to the 15-minute chart because they're not moving like Etsy. They're not moving like Tesla. They're not moving like Nvidia. They're not moving, leaps and bounds. They're incremental movers. So I'm on the 15-minute chart. I entered right here. I knew it was higher risk for 2 reasons. Number one, we're right kind of near support, multi-level support here, right? And right in a kind of a confluence of a buy zone. So it's like, okay, I'll take one short here. I took 5 contracts short, knowing where I wanted to sell was just a 10% premium move, which is exactly what happened. That's why this strategy is so powerful. If you stick to that 10% rule. So we got a breakdown on the 15-minute. I'm entered at $62, and we got a dip all the way down to 63, which it was more than a 10% move on premium actually. And that happened all within 10 15 minutes. Now, the reason why I knew this was high risk, other than looking left and looking at the support levels, was if I look at the volume on that second bar, or I'm sorry, on that first bar, it just wasn't great. It was kind of light, which I expected today as we're running into Thanksgiving. And I said that yesterday. I was like, guys, volume's gonna be light. Moves might not follow through as much. So knowing those things, you can take advantage of those and quickly scalp and get out. We were up on the week, we're up on the month. So I was like, okay, taking it short here's a little bit higher risk. Let's go small contract size, looking for a 10% move, and that's what I got. So let's take a look at SQ. So here we are on the 30-minute chart again. We're at the open. We opened below, so this is one of those reversals, not necessarily reversal flat, but it's a reversal in the sense of we're opening below 50%, so we're looking short, but then it goes long. So we have a halfway decent volume coming into this. We know it had a huge sell-off, so there's not really, looking left, I don't see anything here. There's a huge just gap. So, or empty fill space for price to go. So when I saw it open down here and shoot up and never made a bottoming wick, I was like, okay, gotta get into this trade. So you're entering here at 211-ish, 212. Let's just call it. Let's say we get the worst entry ever. It's 212. You're getting where are you selling? At the top of the line, 214. So you got a 3.5 point move in a half hour, which again is moving premiums a ton. You could have held if you wanted to, but you have clear resistance right here, and it's drawn out in our lines based on our inside day levels, and there's nothing else to say on that. It's become so clear when you understand these rules and these confluences. So Cat was an interesting one. Cat was not one of our normal levels. Cat was based off of something I spot looking left. When I look left, I look for big green bars and a big red bar. Big green bar, big red bar. So I'm looking for price to move up out of those, make higher highs out of that. You can call it, I mean, you can call it what you want. You can call it a broadening formation if you want to. That's fine. I mean, it's kind of what it is. You can call it whatever you want. For me, it's just looking left, looking for a green bar and a red bar. Sometimes you spot them differently. Sometimes they're even better on the 15-minute. The stair step, the ABCD kind of pattern, the broadening formations, whatever you want to call it, they're all kind of the same thing. But I like the 30-minute for it. So I saw this and I said, it's got momentum to it. If we can go, if we can look left and see where a lot of the buying is, right around here. Here's a huge candle right around that $200 range. Okay, so we came up out of that. We're making higher highs. Let's see if we can break above that. And that's exactly what we did, and we got a nice move out of that. The alert was, let me see what the price was on the alert, because I don't actually remember I just took away my lines. So cat was, above 205. So you got a 2-point move. And it never really retested it until the end of the day, which you'd be out by that point anyways. Why? Because you'd be selling right here. Not hard, guys. Very, very easy stuff. Very, very easy stuff to profit on this stuff. Very easy. So actually a 3-point move. The rest did not really trigger. We had, let me look at PayPal. So why, here's the other example I wanted to talk about, why PayPal wasn't one of those ones that we would take as a 50% mover. You could have, and you could have got a 10%, but the reason I didn't was because of this. Just really declining volume into it. Instead of increased volume, I'm seeing decreased volume come in on a break of a pretty key level, and I just didn't like it, and then we entered some chop. So right here from 188 up to 189 is more than 10% on premium, so you could have easily won in this trade. I just personally don't like it when I see falling volume like that, especially compared to the previous day. But again, that was expected as we're moving into Thanksgiving. So that's really it, guys. Let's just go over this one more time. If the price comes down, touches the level, and bounces and shows a bullish sign, you have good volume, you're looking left, you're getting confluence with time frames, you're getting confluence with the algo flow in the Discord, whatever it may be confident in the reversals of these levels. These levels are key. There's a reason why I have these levels set out every single day. Make sure you understand them, watch the other videos to really get to know them, and start looking left. I think that's going to be like our trademark saying in the Discord is start looking left, because when you look left, you get a ton more information. And the next step after looking left is, again, widen out. Go to the daily, go to the weekly, go to the monthly, whatever it is. So maybe it's the 1 hour, maybe it's the 4 hour, doesn't matter, whatever it is. So keep these things in mind, guys, as you continue to trade. And if you're going to trade on Friday, definitely keep these things in mind, because Friday we close at 1 p.m. and you never know what's going to happen. Thanks.